Here's the midday update for March 4th, 2011. On the Dow 10-day chart, we got a strong rally yesterday, but then we didn't hold 0.618 to that rally, and we dropped below 0.786 today. Pretty nasty fade from the intraday highs. And we could be staring at a C wave down at least. It could be A, double top B, and then downward C. I rarely call anything double top, but in Elliott wave, there's a pattern which I identified as a double top B, which means that you get an A, you get two Bs, and then a one C. And that pattern has occurred frequently in the past, and I've seen it a lot. And I was kind of worried about that happening yesterday, so I kind of shied away from making a trade, which is really good. And I avoided this mess today. So, but worst case scenario for the Dow is that we got A, double top B, and then downward C. And if we break below 11,980, it'll set up a C wave to as low as 11,780 about. That'd be A, B, and C. For S&P, worst case scenario is that this is A, double top B, and then downward C. If you break below 1304 and then test, actually, if you break below 1294, that'll set up a downward C. That'll be A, B, double top B, and then downward C, which target as low as 1280 or 1275 or 1280 to the downside at worst. The Dow is actually the worst chart of three of the Nasdaq, S&P, and Dow, and it's gonna help. It's gonna drag the market down because of that, because of how heavy the Dow is right now. For Nasdaq, excuse me. Worst case scenario is that this is A, double top B, and then downward C. But Nasdaq looks okay right now. It's held 0.618, but the Dow might drag it down further into the close. So Nasdaq needs to hold basically 2730 and 2708 to the downside to prevent a downward C. But since S&P and Dow are looking pretty rough right now, well, Dow especially, um, there's a good possibility that we may get a downward C into next week. That's a wrap.